Hello, Explorer friends. On March 19, 2026, I'll introduce Lam Research Corporation, the friend that moved plus 4.13%. Hello, Explorer friends. On March 19, 2026, today's friend is Lam Research ticker LRCX. After a jump of more than 4% in a single session, that is not a small drift. But the question worth asking is not just how far the stock climbed. The question is whether the market was reacting to something proven inside Lam itself or leaning on a broader chip equipment story that still needs harder confirmation. Let us look at the numbers first. LRCX rose 4 to 13% on the day. Over the last 5 trading days, the gain stretches to about 65%. Volume came in near 9.8 million shares. That is a meaningful amount of trading activity. Without a relative volume comparison, we cannot say this was historically exceptional, but the raw figures tell us the market was clearly paying attention. The tape says attention was real. It does not say the thesis is proven. Let us get the map straight first. What kind of company is this, really? Here is where most beginners get tripped up. When people hear semiconductor company, they usually picture the chip itself, the little piece of silicon inside a phone or a server. Lam Research does not make that chip. It does not design that chip. It does not sell that chip to consumers. Lam makes the machines that chip factories use to build chips. Picture a massive, ultra-clean factory floor, rows of enormous tools, each one performing a precise step on a thin silicon wafer. Some of those tools carve incredibly tiny patterns into the wafer surface. That process is called etching. Other tools deposit ultra-thin layers of material onto the wafer, atom by atom in some cases. That process is called deposition. Lam Research is one of the world's leading makers of both kinds of machines. Let us reset the map for a moment. The real point is still where the money flow and the evidence actually meet. So does Lam make chips itself? No. It makes some of the most critical machines the chip factories depend on. Think of it this way. Chip designers like NVIDIA or AMD draw the blueprint. Foundries like TSMC run the factory, and companies like Lam supply the precision tools inside that factory that actually carve and coat the wafers during manufacturing. Without those tools, the blueprint stays on paper. Why does that matter? Because as chips get more advanced, smaller transistors, more layers stacked vertically, more complex memory architectures, the manufacturing steps multiply. More steps can mean more tools can mean more business for Lam. That connection between chip complexity and equipment demand is one of the most important things to understand about this company. In one line, Lam sells critical manufacturing tools to chip factories. It is not the chip brand on the box, it is one of the machine makers inside the fab. Now we know the workshop role. The next question is simple. Who actually pays Lam? Here is the fork in the road many beginners miss. Knowing what the machine does is not the same as knowing how the company earns. So let us split the money flow into 2 streams. The first stream is system sales. This is the big one. When a chip maker decides to build a new factory, expand an existing one, or upgrade to a more advanced manufacturing process, they place large capital equipment orders. Lam sells them etch systems, deposition systems, and related tools. These are expensive, specialized machines. A single order cycle from a major customer can be worth a significant chunk of revenue. The customers writing those checks include memory manufacturers like Samsung, SK Hynix, and Micron, foundries like TSMC, and integrated device manufacturers like Intel. The second stream is the installed base. Once those tools are running inside a customer's factory, they need maintenance, spare parts, software updates, and eventually refurbishment. Lam earns ongoing revenue from supporting the machines it has already sold. This part of the business does not swing as wildly as new system orders because it depends on how many tools are already out in the field and still running. Then what actually makes the money here? More chips sold to consumers or more factory spending by chip makers? Mostly the second one. Lam's revenue rises when chip makers decide to spend heavily on manufacturing capability. It is not directly about how many phones or laptops get sold next quarter. It is about whether the companies that build chips are investing in new capacity and new process technology. That also means the business is cyclical. When chipmakers pull back on spending, maybe because memory prices are weak or because they built too much capacity too fast, Lam's system orders can cool quickly. The service revenue helps cushion the fall, but it cannot erase the cycle entirely. The business rises with fab spending, then keeps earning through service on the installed base. New tool orders drive bursts of growth. Service helps make the business less all or nothing. With that money flow in mind, let us look at what news the market may have been trading around today. Here is what we can confirm. LRCX rose 4.13% on the day and 6.65% over 5 sessions. That is a fact. Lam's business is centered on etch and deposition equipment used in chip manufacturing. That is also a fact. Those two things together explain why investors often connect Lam to stories about advanced chip complexity and AI-related semiconductor spending. Now, here is what sits at the clue level, not the fact level. Several articles pointed to Lam's systems business holding up better than some had expected. If that is accurate, it would support the idea that equipment demand is staying firmer than bears feared. Separately, the broader market appears focused on AI-driven semiconductor demand. AI chips and AI-optimized memory can require more advanced manufacturing steps, which can support demand for process equipment like what Lam sells. But, and this matters, today's information packet does not show a fresh company filing, a new press release, or an official Lam event that clearly triggered this specific move. The stock moved. The business exposure is real. The article-level commentary is interesting. But the direct same-day company-specific proof is still incomplete. So was today's jump caused by a confirmed Lam event? Not from what this packet shows. The setup looks at least partly tied to broader semiconductor and AI infrastructure enthusiasm rather than a clearly isolated Lam-only catalyst. Checking whether peer equipment names like Applied Materials and ASML moved similarly can help separate a Lam-specific story from a wider equipment trade. The tape says attention was real. It does not say the thesis is proven. Best current read, strong thematic fit, weaker same-day proof. Here is where your guide's opinion starts to mix in a little. The most plausible read is that the market leaned on Lam's position as a key chip equipment supplier and connected that role to ongoing expectations around AI and advanced semiconductor spending. Article-level commentary about the system's business holding up may have added a layer of comfort, but this looks more like a thematic trade than a reaction to a hard, fresh, Lam-specific event. An alternative read is that part of the move simply reflects sector rotation into semiconductor equipment names broadly, and Lam happened to be a natural beneficiary given its etch and deposition exposure. A more cautious read is that the stock moved on a familiar AI narrative without enough same-day hard proof to fully validate the strength of that narrative. Confidence should stay moderate, not high. The move is real, but the direct catalyst evidence is still incomplete. And this is just your guide's read. The final judgment always belongs to the explorer, friends. And because one-day stories can wobble, we should check the weak spots next. Then, what could make this story wobble fast? Risk number 1, chipmaker capital spending can turn quickly. Lam's biggest revenue engine depends on customers spending heavily on new manufacturing tools. Memory makers and foundries set their equipment budgets based on demand forecasts, pricing trends, and capacity utilization. If those customers slow expansion plans because memory prices soften, because utilization drops, because macro conditions tighten, system orders can cool fast. The signal to watch: customer CapEx guidance cuts, fab delay headlines, or weaker spending commentary from major chip manufacturers, a specific customer: Samsung, SK Hynix, Micron, or Intel. Risk number 2, export control pressure can hit addressable demand. Lam sells into a global semiconductor ecosystem. Policy changes, particularly U.S. export controls on advanced semiconductor equipment, can limit what Lam is allowed to ship into certain markets. That can affect both near-term revenue and longer-term planning for the company. The signal to watch: new export control announcements, company commentary on restricted shipments, or filings that point to regional demand pressure. Risk number 3, today's move may be leaning more on theme than on proof. The stock's AI and semiconductor equipment fit is real, but this packet does not show a fresh official Lam event today. If the market was mostly trading a broad theme, the move could fade if that theme cools or if peer equipment names start giving back gains. The signal to watch: whether peer equipment names keep their strength, whether follow-up reporting adds hard Lam-specific evidence, and whether LRCX can hold gains without a new company-specific catalyst. If the spending story weakens, equipment names can cool quickly. If those are the weak spots, tomorrow's checklist becomes much more useful. Here is what to watch. First, do peer equipment names like AMAT and ASML confirm the move with similar strength, or does LRCX trade differently? This helps separate a Lam-specific read from a broader semiconductor equipment trade. Second, does any fresh company commentary, filing, or credible follow-up reporting give a harder reason for today's move in Lam itself? The current evidence is theme-heavy, so a direct Lam-specific update would materially improve confidence. Third, do headlines around memory expansion, high-bandwidth memory, or advanced node fab spending continue in a way that clearly connects to Lam's etch and deposition exposure? Lam benefits when process complexity and fab investment rise, especially in areas where more manufacturing steps matter. Fourth, does LRCX hold its gain better than a generic chip rally would suggest, especially if the broader semiconductor group cools during the session? Relative strength can hint that buyers are treating Lam as more than just a passenger in a sector move. Fifth, do major customer or industry updates point to stable or rising fab equipment budgets rather than delays? Lam Systems' revenue is tightly linked to customer CapEx plans, so budget tone matters more than abstract AI excitement. Now for the study pocket, the part that should stick with you beyond today. In semiconductor investing, one of the most useful habits is separating the chip brand from the tool supplier behind the factory. When a new demand wave appears, AI, memory expansion, advanced nodes, whatever the theme, upstream equipment makers can benefit. But they benefit not because they sell the final chip to a consumer. They benefit because chip makers need more manufacturing capability and more process complexity, and that means buying more tools. Here is a 3-step framework you can reuse on any equipment name. Step 1. Ask where the company sits in the supply chain. Is it a designer, a manufacturer, or a tool supplier? Step 2. Ask whether revenue comes mainly from one-time tool sales or from a recurring installed base, and how cyclical each stream is. Step 3. Ask whether today's stock move is backed by a company-specific event, an earnings beat, a new order, a filing, or only by a sector narrative. That third step is especially important for days like today. A strong thematic fit can explain why the market looked at a stock, but thematic fit alone does not confirm that the move will hold. The difference between a durable re-rating and a one-day sector ride often comes down to whether hard company-level evidence shows up to support the story. You can use this framework the next time the market starts buzzing about AI chips, memory expansion, advanced packaging, or fab buildouts. Ask where the company sits, how the money flows, and whether the move has company-specific proof or just sector wind behind it. For Lam specifically, the tension worth remembering is this. The business exposure to advanced chip manufacturing is genuine and well-positioned, but today's move arrived without a clear, fresh company event to evidence it. Whether that gap gets filled in the sessions ahead is what separates a story that deepens from one that drifts. Today, Lam Research Corporation looked closer to a session where expectation ran ahead of direct proof. Keep just this on the map, close by, reminding the viewer that the stock move and Lam's business role are facts, the article-driven demand story is a clue, and the market read is interpretation. Remind the viewer that this is a study map for understanding the business and the move, not a command to buy or sell. Let's check another company together tomorrow. See you.
We're all like Joe.